Hello and welcome to our first stock breakdown via YouTube, our Sunday Scary edition. We got me, Brandon, co-founder of Green Candle, and then we got Danny Drinks over here, recovering from the hangover in the gray hoodie with a little cup of coffee, a little bingo, a little bango. How you doing, Drinks?
First ever Sunday Scaries Stock Talk for us. Yeah, man, recovering well. Had the Pedialyte this morning, got the coffee flowing now, and probably gonna hit a workout, sweat it out a bit.
Yeah, I haven't done anything. I haven't left my house today. My dog is a little furious with me. I need to get him out and walk him a little bit, and get Max back on his weight loss journey. Oh man, he's struggling. Yeah, he's not struggling. I'm struggling. I mean, I'm all over the place right now, man. But yeah, let's go through a little bit of the structure of like how we're gonna go through this. So because this is the first one, we're going to essentially give like a little bit of a macro. Maybe we'll call it the macro minute, but it won't be a minute. We'll go through and just give our general sentiment. Maybe we'll go over some big macro announcements. If CPI numbers are being released that week, we'll essentially, give our predictions and kind of how we're feeling going forward. And then we'll go through the stock that we're going to be breaking down in our newsletter. And then we'll give a little bit of our opinion. Because in our newsletter, we essentially just give both sides and we try not to give an opinion. The YouTube segment, though, we're gonna try to give you more of our outlook. And of course, this is not financial advice. Got anything else?
Yeah, nothing we say is financial advice. We're just two dudes who probably drank too much on a Saturday and are sitting here talking about stocks on a on a Sunday. So don't take any of this as investment advice.
And I'm a very bad investor, so please don't listen to me.
Yeah,
Just
geez.
kidding. I'm
If
not
I
not
if
too
I
bad.
made my portfolio public, you definitely wouldn't follow anything I say. All right,
Yeah, that's why we do a lot of various innovation ones. But all right, yeah. So let's start the macro minute. So what do you got for us? How are you feeling about the market going forward? We had a pretty tough week last week, with a lot of red days, and not just little red days, a lot of big red days. So how are you feeling going into this week? Do you think it's going to turn around or kind of continue on the same path?
Yeah, I don't know. I don't know if it's going to be a week to week turnaround. Obviously people are trying to suss out what the Fed's actually going to do. Like they're saying 3 to 4 rate hikes possible this year. There's some people coming out saying like 7 or 8 are possible. I don't know, man. We're taking a pretty nice haircut right now, and we'll see. Maybe this week the Fed does come out and they say, well, you know what, maybe we maybe we shouldn't be doing this taper and rate hike. I don't know. We'll see how steadfast they are in their how do you put it? How steadfast they are in their commitment to raising interest rates this year. I don't know.
Is
My bet is still that they're not going to do it. But this we'll see. We'll see, because even just the talks of tapering and rate hikes this week, really over the last month, have caused a pretty big dip in the markets.
Yeah, I agree with that 100%. I think, when they're, they're not gonna, I don't think that they're gonna raise rates. And if you've been following us for a while, you know that both of our opinions are that they're probably gonna print more money within this year. And whether that's with the Build Back Better plan or something else, I think that, the market is just extremely inflated. And it's kind of letting a little air out the balloon right now. And, I think either the government is going to step in and do something like printing trillions of dollars in order to, get in order to reinflate the stock market. Because, whether we like it or not, a lot of people view the success of the stock market as an economic outlook, even though the two aren't really correlated or aren't correlated at all. The president even mentioned that, his predecessor used to talk about the stock market success all of his previous 4 years. And, he's not going to look at the stock market, but it's kind of hard not to. And to be honest, I think that they're going to print money before they raise rates, because raising rates makes it more difficult for everybody else, and they still, profit off this inflated stock market as well. I mean, we've seen the Pelosi tracker on Twitter gain intense popularity and then get kicked off the platform, and it's just, people are becoming growingly aware of, kind of the rampant insider trading that's going on right now.
Yeah, 100%. I mean, they not only stand to gain financially, but politically too, right? So it's a midterm election year in the US, 2022. A lot of these people are probably not going to be happy if the market crashes. Like you were saying, a lot of people in the US actually view the stock market or how the stock market's doing as kind of how the economy is doing. It's not the case, but that's how they view it. And then there's a lot of retail traders, right? Products that came out like Robinhood have made it so easy to get into the investing game. So how many retail investors entered the market in the US during the lockdowns and all of this other stuff? How many people got
Yeah,
in?
there's the big yawn.
How many people got into it and they're looking at their Robinhood account every 10 minutes watching it tank? And like these politicians know that people are looking at this stuff, and they're going to associate it with leadership and who's in charge. And at the moment, they're probably not going to like people seeing these red candles, and so I don't think that they're going to let this market tank. I think you're right. I think they're going to roll out more stimulus. They were already talking about doing this. I'm not sure where in the process they are, but they're already talking about another round of stimulus for small businesses. We know that the last time they rolled out stimulus for small businesses, billions of dollars went missing or unaccounted for. So again, they're benefiting financially, whether it's through inflated assets, and they're also benefiting politically. So I don't think they're going to let it crash in midterm election year 2023. I think we'll probably see some pretty major downturns.
Yeah, my prediction is pretty similar. I think that, maybe 2023 to 2024, the end of 2023, 2024 is when we'll see the crash, because then, essentially they can spin it to, you got to keep the same people in power because, the consistency will help, correct the market, which, might not necessarily be the case. But yeah, I think that's it for the macro minute, unless you got anything else.
I did just want to say too, because I listened to Preston's newest podcast yesterday, and he had Groman on, and Groman was basically saying, whoever says that they want this job either has no idea what kind of danger they're in, or is just power hungry, like wants the job for all the wrong reasons. Because you're essentially, I think the way he put it was, you're essentially given a stick of dynamite. You say you can make $150,000 holding the stick of dynamite, but you're holding a stick of dynamite. So, yeah, that's all I've got. Just my takeaway here is get through this red. If not, I don't know. I'm still buying. Like I'm still doing my daily cost average routine with all of the assets that I believe in. And I think it's going to turn around. I think it's going to go back up again. Not investing advice, but we'll see. That's the name of the game, right?
Yeah, I mean, I think now it's more important now than ever to invest in companies that you truly believe in. Because speculation now it's very tough because the access to capital is just so easy. I know we got into that a little bit on our Friday spaces when we were kind of going in on Netflix, and our good friend Masa Suncap, I believe, is his Twitter handle. Give him a follow, but he's enjoying these red days for Netflix, at least because he's a big Netflix bear. But essentially, a company like that, they have a bunch of access to money, and they haven't been profitable, and their model and everything like that. We'll kind of get into it on what I think about Under Armour in our stock talk, but they have to spend an immense amount of money to put content on their platform. And, not only do they have to spend all that money, it has to be quality, because if it's not quality, then people aren't going to come back or stay on the platform. So, they've benefited greatly from, creating the streaming and everything like that. at making videos and movies and TV shows more accessible to the average person. All you need is an internet connection. But it's with the increased competition and everything like that, it's made it very difficult for Netflix. So yeah, that's all I got. I actually did listen to that Preston podcast as well, and I believe he said that the guest said that if they actually want the job, that they shouldn't have it because of those reasons that you stated as well. So
Yeah,
yeah.
I do, man. Just to follow up on your Netflix talk again, this is not. It's like streaming isn't losing. Streaming videos is not losing. It's the companies that aren't doing a great job with the money that they got over the last 2 years. Those are the companies that are going to lose. So when you're looking at these companies now, you have to have a long-term confidence that they're going to succeed. But just look over the last 2 years, look at their quarterlies, look at their annuals. How did they spend this capital? What did they do with that capital? And do you believe that it was put to good use? Because a lot of these companies got this capital and they're like, oh, we're gonna mint some NFTs and we're gonna get into these spaces that we've never been in before. Whereas other companies, I look at like Microsoft and I look at Nvidia, I think they took that and they put it into R&D and they put it to good use. So I would just say when you're looking at these companies, especially in 2022, just look back, look at what they did in 2020 and 2021. Don't just look at their stock price, go into their reports, figure out where they dumped that excess capital and see if they even took any excess capital. I'm guessing most of them did. But if they didn't, try to suss out like, well, there is easy access to capital. If you've got an idea, now's the time to gain that capital, put it into R&D, test that idea out. So yeah, that's all I've got. You want to talk Under Armour?
Yeah, for sure. So we brought it up already before, but the company that we're breaking down this week in our Substack newsletter that you should subscribe to. It's greencandleinvestments.substack.com. If you're not subscribing already, to get our full kind of breakdown. But yeah, we're breaking down Under Armour, and if you don't know Under Armour is a athletic apparel and footwear company. They sell products worldwide. They're very well known, I would say, for their compression wear. The tight-fitting athletic clothing they kind of made popular, and that's how they rose to become one of the top athletic wear companies in the world. They're very well known for sponsoring various athletes as well. Two of the biggest are Stephen Curry from the Golden State Warriors and Tom Brady, the GOAT from the Tampa Bay Buccaneers. So I guess a little bit about the stock price and everything like that. Under Armour is currently trading at $18.77 with a 52-week range of $17.16 to $27.28. So it's near the bottom of the year range, and with a market cap of 8.29 billion. So although the stock price hasn't done super well, their last quarter was not too bad. They had revenue increased by 8%, bringing it to 1.5 billion, and their gross margin increased by 310 basis points with 51% and just some of the other key metrics here that we look at as well as like the debt to equities ratio was 1.44. And how that's calculated is it looks up the total liabilities divided by the total equities. And so that's just kind of a brief overlook of Under Armour's financial statements. We did go into a little bit more in depth in our newsletter, so I'll plug that again, greencandleinvestments.substacks.com. From there, our kind of qualitative analysis of Under Armour is that it's one of the largest sports and athletic wear companies in the entire world, and it's got a lot of sponsorships. That's kind of similar to Nike, which we broke down 2 weeks ago now, from the release of this video. These companies, they have to basically market and sponsor athletes, teams, colleges, and everything, and that comes at a huge cost. One alarming thing I think for Under Armour is that during the COVID-19 pandemic, their CEO came out and said that they're going to continue to focus on performance rather than athleisure. And athleisure has been a big trend where, a lot of people are wearing maybe golf polos or comfortable clothing to the office. And not only that, now wearing comfortable clothing while working from home or working remotely. But as more and more people go into the office, more of that comfortable athletic wear will be similar to like a Lululemon or something where people, want to wear comfortable clothing that they're going to be sitting in for 8-ish hours a day. So yeah, Dan, what do you got on the bullish thesis for Under Armour for us?
Sure. I'll just start out by saying I don't own Under Armour. Until yesterday, I hadn't looked at Under Armour at all. I'm just not really into this sector, like Nike, Under Armour, Adidas. I just don't really get into it that much. But after looking at it, I mean, bullish wise, they're coming out of a restructuring period. They just spent a lot of money with the hopes that they're gonna restructure, improve profitability. I've got some numbers here from Seeking Alpha. It says that the charges for restructuring covered lease terminations, employee severances, asset impairments, and other costs. The restructuring plan was implemented to rebalance their cost base, improve profitability, and improve cash flow. So they're coming out of this restructuring. We're going to see how they do. The other thing that I was looking at was their redistribution of sourcing. So we all know that there's major supply chain issues. Like if you didn't do something about the supply chain issues through 2020, 2021, or if the company that you're looking at didn't do anything with supply chain issues, like, vertical integration or things like that, trying to couple as much stuff into a single process as possible, you should really seriously question the company. I'm looking here again at global sourcing from 2018 to 2023, and you just see a major redistribution of sourcing. So they've spread out where they're getting their materials, which I think is huge, right? If you've got a single choke point or bottleneck in your supply chain and you're a company like this, I mean, you're at a massive disadvantage. So I like that they're redistributing their sourcing. And I mean, the other big thing is it's Under Armour, right? You mentioned it. They sponsor a lot of athletes. They sponsor a lot of schools. They've got the name recognition. Everyone knows the Under Armour brand. They know the logo. And when they see it at a store, they're not going to question whether it's good quality material. And they've been around for a while, so they've had some sticking power. I personally don't even use Under Armour. I don't like that tight fit feel that they're known for. I'm more of a loose fit guy. Everyone that knows me knows that. Look at my hoodie. It's an XL. I usually, I'm a medium-sized body that wears large gear. I'm a loose fit guy. What can I say? So I don't know. I mean, they've got it. They've got the brand recognition. They're coming out of a restructuring period, and they have widened the distribution of their sourcing. So those are the three things that I point out as bull arguments for Under Armour.
Yeah, and similar to you, I don't own any Under Armour stock or Nike or anything like that. I'm kind of bearish on this sector as a whole. And part of that is what I mentioned in the qualitative analysis. It's just like their large marketing cost. So, although that they sponsor some of these big name athletes and it helps benefit them, they have signature shoes for Stephen Curry and everything like that, who's a very, very popular basketball player. And, they sponsor big colleges, big college programs. So, when you buy those college athletic programs gear, you're buying Under Armour, clothing. But, with that, it comes a large cost. So their marketing costs are, every year going to be increasing because more and more athletes are going to come on. There's NIL deals now with collegiate athletes. So not only are they sponsoring professional athletes, they're probably going to start sponsoring some collegiate athletes. Under Armour also recently got into a lawsuit with the University of California, Los Angeles, or UCLA, as many people know it. They signed a contract with them for a 15-year, $280 million deal. And they tried to back out of that deal after signing the contract. So now UCLA is suing Under Armour for damages. So, I mean, not only is it a big cost just in general to sponsor it, I mean, you heard the numbers, 15 years, $280 million deal just to sponsor a school like UCLA. Although they are a big name school and probably one of the more recognized schools in the country, that's a lot of money. And they tried to back out of it. And now it's probably going to cost them a little bit more money because, they're going to have to, make sure all the lawyer fees and everything like that to deal with that. So not only are those large marketing costs, there's increased competition. So more and more of these companies like Nike, like Puma, for example, is even now getting in and sponsoring athletes and trying to make a big name for themselves in realms like basketball, which they never were really in before. And so that, and they're not even the biggest in the athletic wear market. So when I'm overall just kind of bearish on an industry as a whole, it's kind of hard for me to see why I should invest in a company that's not exactly the biggest in that industry. So it's just very hard for me to see how Under Armour is going to come out of this and be, the name brand. They do have that big recognition, like you were saying, but I mean, I think Adidas and Nike are still the top two players, and they're going to be the top two players for a long time for the foreseeable future. And I also think, as I mentioned earlier, the CEO coming out and saying that they're going to focus on performance opposed to athleisure really, really hurts the business because whether you like it or not, like it's a trend that's probably here to stay. And I think that you should dive into a trend like that. You're seeing Lululemon rise up with popularity. I know I got my Lululemon jogger sweatpants on right now, walking around the house in them, especially at this time of the year, is very comfortable, and I wear those to work in almost every day. So I do like Under Armour's clothing, and I wear Under Armour golf gear and stuff like that. I think that they make very, very good clothing, but I think that the athleisure aspect of it should be something that they should, develop some sort of clothing wear too. I know that they have like loose fitting t-shirts and things like that. So I just think overall it was kind of unnecessary for the CEO to say that. And I think that not leaning into this and creating, maybe some more shorts or shirts or joggers or what have you for athleisure wear would benefit Under Armour in the long run. And I don't think it would be too difficult to develop for them, as they have a lot of these products already somewhat available. So that was a little disappointing to see. And yeah, overall, I'm just bearish on Under Armour. I don't think I would buy any of it. Obviously not financial advice, but I'm just overall just kind of bearish on the sector as a whole.
Yeah, 100%. I agree with that. I'd also like to see them move more into like a LATAM type market. It's currently based on their 2020 data, like 4% of their market's LATAM. They're huge in North America. Obviously, I'd love to see them kind of broaden their market exposure. Then the other thing too that I would point out is that the vast majority of their revenue comes in through apparel rather than footwear. And I look at a company like Nike, who's got both the footwear and the apparel. When I'm thinking Under Armour, I'm not even thinking footwear. Like, I don't think I'd ever wear an Under Armour shoe. Now, it might be different in the NBA or the NFL where you're wearing, like specialized shoes or cleats. But for me, I'm a recreational runner. So if you're going to go into performance and you're trying to reach a broad market, you're looking at recreational athletes, and you need to cater to that market. And if you don't have the footwear to do it, you're just not going to get those people. So both Brandon and I ran for the University of Memphis. We were athletes, and I don't know if it ever crossed your mind, Brandon, but one of the things that I did look at when I was looking at schools was like, who's their sponsor and what kind of shoes am I going to be wearing? And as a senior in high school, up to that point, I'd been wearing Asics. Then I made the decision I was going to go to Memphis, and I immediately switched to Nikes to try to get my feet used to it. Like, something like 80% of recreational runners get injured every year. And footwear, I think, plays a big role in that. And so I don't know. I'd love to see Under Armour get a little bit more involved in their footwear too. You're not going to get like
Yeah.
there's not a bunch of recreational athletes out buying cleats, right? Football cleats. So if you're going to try to hit the widest market possible, you're going to be developing things like walking and running shoes, in my opinion.
Well, I mean, I do think that there's an aspect of not just recreational, but there's thousands, millions of high school athletes that play football, and whether it's uh, shoot, what is it, intramurals in college, people will go out and buy cleats. I mean, I'm in a kickball league, and I bought some soccer cleats just to play in, just for a little bit better stuff. So, I mean, I'm not going to go out and buy like the most expensive ones or anything like that. So if they're dealing with high performing shoes and that's what they're kind of focusing on, I agree. Maybe there's a cheaper product out there. Not a plug, but I did buy some Nike kickball cleats, so just simply because they were cheap. I went to Dick's Sporting Goods and just found the cheapest, nicest looking pair that fit my feet all right. So I think that there still is a market for like recreational, somewhat athletes, maybe not the elite caliber athletes that you and I are, but definitely some rec athletes out there that would be buying some stuff. So I think that Under Armour is kind of slowly developing their footwear. They started off with clothing and moved into footwear, opposed to like a company that like Nike that started in footwear and then developed clothing. And so I think that it's growing, and it's still, like I said, like an uphill battle, because, you got to get a athlete like Steph Curry or Tom Brady or something like that, where you develop like a signature shoe. And then that's when people think it's cool to wear those shoes around. And I think that that's the biggest hurdle for footwear, because, Nike's got the Air Jordan brand, and that's kind of how they shot up to popularity in basketball shoes. And obviously their history in Nike with track and field athletes. They have probably, I mean, if you watch a track meet, majority of people out there are wearing Nike distance running spikes or sprinter spikes or anything like that, if they're not sponsored by some Adidas or Puma or something else like that. So yeah, I mean, I agree. No, I'm not really running out to the store to buy Under Armour shoes. I think I've owned maybe one pair of Under Armour shoes. I don't know if I really even have too many Under Armour apparel hanging up or anything like that either. So yeah, overall, I'm just bearish on the market. I don't think it's like a great investment unless it's maybe like a Nike, just because of how big it is, that it has its staying power. But a company like Under Armour, it's kind of hard for me to justify that investment, at least in my head.
Yeah, I agree 100%. If I had to pick, I'd probably pick Nike too. And Nike's making moves more towards developing software and things like that too. So they're kind of getting plugged in everywhere. I didn't realize Tom Brady was sponsored by Under Armour. I do. The only thing I know about Tom Brady at this point is that he's in that Hertz commercial that I see every 3 minutes. So, all right, man.
Well, being in the Tampa Bay area, he's everywhere. So, I mean, he's definitely growing popularity down here, and I think he also developed like the Brady brand. So I don't know if that kind of is a conflict or what, but I know he's developing his own brand. So whatever that has to do with Under Armour, if Under Armour is making that clothing, or if it's just Tom working out on the side, I'm not 100% sure. But that also could be a positive for Under Armour going forward if Tom Brady's brand, the Brady brand, I think is what they're calling it, kind of explodes.
Yeah. All right, man. Let's wrap it up, huh?
All right, yeah. So that is the first of our stock Sunday Scaries hungover edition of breaking down. We gave the macro minute. Overall, we're both kind of I guess bearish on the overall market going forward. Is that what you would say, or how would you describe that?
Dude, I'm looking at the Brady brand website right now, and there's not a single Under Armour logo anywhere on here.
Yeah.
So I think
Yeah,
it's
so
I think
I'm
it's
not
developing
sure
on
what
its
he's
own.
doing. Well, I mean, if you look at like the Jordan brand, if you go and search that, yeah, it's Jordan Nike.com or Nike.com/Jordan. So there is Nike logos all over that. So
Yeah.
I don't know. You could be right about that. But yeah, I think I guess to wrap it up, we're Brandon and Dan from Green Candle Investments. You should follow us on Twitter. We got a lot going on there at Green Candle IT. And then also on Instagram and our YouTube channel. You should like and subscribe to this video. If you haven't already, let us know what you think. This is our first one of these, and we're going to try to keep doing these weekly, dropping them on Sundays before our newsletter to kind of help tease it out a little bit. We'll probably even link it in our newsletter. And yeah, subscribe to our newsletter, which I've plugged a couple times, greencandleinvestments.substack.com. We'll have that in the comments below. And yeah, Dan, anything else you got for us?
Yeah, did bear with us because these Sunday scary episodes are probably going to be a lot of rambling and mistakes, and the brain's a bit jumbled from whatever we end up doing Saturday night. So just bear with us, man. Let us know what you think. We're trying to push out as much content as we can.
Yeah, for sure. Yeah, so we're gonna be cranking it out. So give us a follow and yeah, be on the lookout for some major announcements coming soon. All right, Green Candle out.